there, Cheryl here from Pig. Today I wanted to talk about bookkeeping and why it's such an important part to the accountancy process. This is quite probably going to be a long video. It is a long vlog, so I'm sure I'm going to ramble on about bookkeeping and why I am so passionate about it. So maybe grab a cuppa and you can listen to me. So we often refer to bookkeeping as the foundations of your financials. Just like your house needs foundations to build on, it's crucial that your bookkeeping is up to date and is accurate, because everything else stems from there. Keeping good bookkeeping records will mean that you've got reliable and meaningful information, and it will mean that you can make those decisions that you need to make. It'll help you to understand your business, where you're at, and make the decisions that you need to do to progress in your business. So it could be that you need to know where you are in relation to your goals, how far you need to go if you're not quite there yet, or how close you are to reaching that goal. How exciting is that, knowing that you are so close to reaching a goal that you've set. And as I said before, everything else stems from bookkeeping. So without the bookkeeping records, you can't do things like cash flow forecasting. You can't do credit control if you don't know who even owes you what, can you? You don't know, if you don't know what invoices are paid and what aren't, how do you know who to chase to payment you? So to put it bluntly, basically, I suppose, nothing else can be done until the bookkeeping's done. And by done, I mean in a good state. So if you're thinking of doing the bookkeeping yourself, which is perfectly fine to do, not against that at all, there's just some things that we want you to consider and to look out for, to make sure that you're doing it in the best way that you can, because obviously it's so important and it's going to help your business in more ways than you actually probably realise. So first of all, think about how long it's going to take you to do something. For example, we find a lot of clients feel they want to do the bookkeeping themselves to keep the costs down, which is perfectly acceptable, as I said before. But realistically, how much time is that going to take you? It's like I could put, and I have done in the past actually, put a TV on the wall on a bracket. Is that an effective use of my time? Could somebody else do it a lot quicker than me? Definitely yes. Would it be less stressful? Definitely yes. But what I'm thinking is, yes, it's all well and good keeping those costs down, but actually, is it costing you more by doing it yourself because you're not out there doing what you should be doing with your business? And therefore you could be losing money there. And so that opportunity cost. But also it could be something like, we hear a lot, our clients will do their bookkeeping on a Sunday. Who wants to be doing their bookkeeping on a Sunday? I'm sure there's much better things you want to be doing on a Sunday. Taking your kids football, maybe you don't want to take your kids football, maybe that's the excuse to get out of it. But you know where I'm going with this. There's many other things you could be doing rather than your bookkeeping. But of course, I do appreciate why some people want to do it, so I don't want to go into that too much. How often will you complete your bookkeeping? So following on from what I've just said about how much time it takes, it can be something that people dread doing. And we've all got those tasks. I've got tasks, videos, sometimes I dread doing them, and it takes me forever to do them, and then I bang out loads in one day while I'm on it. But we don't always have the time to keep on top of things. So, and quite often, the more things build up and the bigger the job gets, the more you dread doing it. So we find that many people find all the excuses under the sun to put it off. It's always that one thing, isn't it? That one thing you dread doing, you can find any excuse to get it put off. But not only will that lead to anxiety for you as a business owner or the person doing the bookkeeping and the dread of doing it, but it will also mean that your data is out of date. And the whole point of bookkeeping and good bookkeeping is you've got up-to-date, reliable information. How can you make a decision, for example, on hiring a new person? Can you afford to hire a new person if you don't know your sales figures from the last few months? If you don't know your profit from the last few months, you don't know if there's enough profit there to pay for a new person. Or if you're looking to get to that goal of paying the new person, how do you know how much you need more to make before you can hire that person, or that rent an office, or whatever it is that you're looking to do? The more up to date your data is, the more it can tell you about your business. And then there's things that follow on from there. We mentioned before that obviously a lot stems on from your bookkeeping, but how can we, as your accountant, or your accountant if you're not with us at the moment, prepare your monthly management accounts, for example, or your cash flow forecast if your bookkeeping is not up to date? We can't. How can we do your VAT return, or you do your own VAT return, your accounts, if it's not up to date? And again, it's going to cause delays, it's going to cause frustration, it's going to cause stress, and that's going to be on both sides as well. We hate chasing you just as much as you hate us chasing you. So it's a two-way thing. But it could mean that you're not able to make that timely decision. It could mean that because something's delayed, it's going to cost you more. If the deadline's looming, and the deadline's on a Saturday, and you give us the stuff on a Friday, for example, we may have to pay overtime to the team to be able to get that done to reach that deadline on Saturday. Or it could mean we won't reach that deadline on Saturday because you've given it to us far too late and we can't make it work. And therefore you could then get penalties from HMRC or Companies House, depending on what it is. So there's a lot to it there. And another example I'm going to give here as well, because I think this is a really important one, especially if this is one of your goals as well, and then why we bang on about goals and why we want to know them and everything. But say you found a perfect house. It's the best house in the world. It's the one you've been dreaming of, and it's there and it's available. Yet you've got to get that offer in, and you've got to get that mortgage offer. Your year ends, or your year's ended, potentially, and you're like, right, let's go. And then we're like, yeah, your record's like 6 months out of date. We need this, we need that, we need this to get your accounts done. And therefore we can't get your accounts done. So you can't get it in, so you can't get your mortgage approved. And therefore you lose the house. And that's not what we want for you. We want to be able to do that. So having everything up to date means that we can get on and we can do it like that. All right, not quite like that, but you know what I mean. We can turn it around, we can jump on it, and we can help you get there and make sure that you don't lose that house of your dreams. At Pig, we complete our clients' bookkeeping pretty much on a daily basis. So they've got all the information they need at their fingertips when they need it. I don't want to brag here, but we've actually had accounts prepared and filed within 36 hours of a year end once, because we knew in advance this is what the client needed. We've been working with them for a while. Obviously they told us in advance, and they were very good at getting it, making sure everything was on top, up to date, and we was all on top of everything, which meant that we could turn it around really quickly within a day or two, and they could approve it and we can get it filed. And that's the sort of thing we want to be able to do. That's how we help you. And I think I've done I know I have a video and blog on why we want to know your goals and how we can help you with your goals, and that's just one of the small last things we can do. So that's kind of why they're so important and why we bang on about that sort of stuff so much. Now I just wanted to go through a few things that you can keep an eye on if you are doing your own bookkeeping, things that we often see go wrong, where we can help you to make sure they're right. So quite often we see with clients that their bank account doesn't balance, so they've got everything onto zero, so they think, reconciled all the bank, and the balance showing on zero doesn't match what's on the statement. And so it's quite a common issue, and it could be fairly simple to fix. However, it could be a really big issue, and it could be really really difficult to fix. It could be anywhere in between that spectrum, and we don't know about it. There's many reasons why it happens. You may have put in the wrong starting balance. The feed may have dropped. Technology, as much as we love it, it is not perfect. No, it is. So it could have dropped out, it could have duplicated some transactions. We've seen that in the past before. We've also seen people delete transactions that are personal, and you're like, oh, that shouldn't be there, delete. Well, that's then not going to add up, is it? Because it's not going to balance. And even add in transactions that haven't gone through the bank. So there's various different reasons there. And as I said, sometimes it's easy to spot, sometimes it's not. And however it's happened, it needs to be found and resolved before year end. And it's even more important when you're going to do things like cash flow forecasting, because if your bank balance is incorrect, how on earth are you going to be able to predict and forecast your cash flow? It's just never going to happen, really, is it? So that's something to keep an eye on. We recommend checking your bank statement to your Xero bank statement quite regularly. We try to do it depending on the client. Some clients we do it monthly, some clients we do it with quarterly. At a minimum, we do it annually. But it's something, if you're doing it yourself, there's no reason why you can't be checking that monthly as a minimum. Missing transactions or bank accounts even from your Xero. So we quite often find that things are missing when we come to do year end. We've had it where whole bank accounts are missing before, like a company credit card or a company savings account that's been set up for your tax savings. We can see all this money going out. We think it's gone to you because we don't know about this other savings account for your tax. So we could be saying, oh, that's all your money you've taken out. Put it down as your dividends, and then you get charged extra tax, all because it's missing. So there's things like that we need to keep an eye out for, and you need to make sure it's on there. It could be you've paid for something personally, therefore you've not included it because it's not gone on the bank account. It could be even a sales invoice has been raised from your sales management software but not uploaded to Xero. And many little things like that. And incomplete records are just as bad as not up-to-date records, because again, it gives you an incomplete picture of your finances. So it could mean that, as I said before, you end up with too much tax, because we think it's money you've taken for you, or it's actually money you've put aside in a business savings account for your tax. But it could be that if you're missing things like things you pay personally, you're paying too much corporation tax because we're not taking that into account. So there's a lot there that could go on. And again, that sort of thing could delay your accounts being done as well, because we're having to go back and forth to find out what's missing to add it in. And while we're on the subject of missing things, uploading your receipts and purchases to Xero via Dext. Well, I got it right, I didn't call it receipt bag. That helps keep everything in one place. So it will stop us asking questions that could easily be avoided by us looking at the receipt. So having that receipt uploaded into Xero means that if we've got a question, we can just click on it and look at it and go, oh yeah, that's fine, and we can change it or deal with it or do whatever we need to do, and we don't need to pester you for the receipt or ask you questions. So that's that. Incorrect or inconsistent classification of expenses. And I know this is a bit of a bugbear of some of our bookkeepers, when we see things classified either incorrectly or just lumped into general expenses. And quite often we need to resolve these things because it's not giving you a clear picture of where your money is going and what you're spending your money on. So we can't do accurate management accounts or year-end accounts because we don't know where to allocate that money. Another problem we see is where expenses like small computer or office equipment, so say like a mouse or a keyboard, has been classified as an asset when actually it should have been classified as an expense, or vice versa. We've had it either way around as well. Now this might not sound like a huge issue. It might sound like us being boring, stuffy accountants and moaning because you've done it wrong, but actually it does affect the accounting treatment and sometimes tax treatment too as well. So it is important that things are classified correctly. And on this area, another issue we see is inconsistent treatment of expenses. So say your Canva subscription, it could be It could be classified as a few different things really. So it could come under marketing because it's part of your marketing, create your marketing materials. It could be classified as IT software, as obviously it is cloud software. It could be classified as a subscription, as it's a monthly subscription to the software. So subjectively, you've got 3 options there where to put it. I don't know if you can see 3. There you go, 3. And all 3 are correct. There's nothing wrong with either of those ones. And with this example, the end result is the same no matter what. However, you need to have it consistently in the same place, because otherwise how can you compare year on year if your costs are going up or down if they're not being classified the same? Because you're comparing against oranges against apples, and that's just, yeah, it's just not going to give you anything, is it? And it's not going to be able to help you to spot any issues like duplicate payments if they're all over the place. So defaults in Xero and in Dex are actually a really good way of helping you with that and making sure that you are consistent with where you're putting things to. Okay, incorrect VAT treatment. So obviously if you're not VAT registered, doesn't matter, everything's going to have no VAT on it, so it's fine. But if you are VAT registered, you need to make sure you're splitting it where you do need to, and you're using the correct rates, especially at the moment where you've got the 5% rate and it's going to 12.5% and things. You need to make sure it's going to the right place. You could be claiming VAT back where you shouldn't, and therefore you're going to have to pay that back at some point to HMRC, because they will find out and it will need to be paying. But also you could be claiming it back, or you may not be claiming it when you should be. And therefore you're missing out on claiming it back, so you don't want to be doing that either, do you? So if you're doing your own VAT returns, you could be submitting them incorrectly, and as I said, down the line you will get found out because HMRC do check these things eventually, and depending on whether they deem it's deliberate or just an instant error or anything, not only will you either have to pay that VAT back, but you could have penalties as well. So that's just something to bear in mind. It is important, and it's not just a click of a button. Again, I've done a whole lot of video and blog on this. It's some of the companies that I see advertising on TV, the green ones, would say it's just a click of a button, and all their little bots or whatever they call them in the background do it all for you. It's not that simple, because no matter where you put it, that's where it's going to go on the VAT return. If you put it in the wrong place when you input it, funnily enough, that's going to go through to HMRC. There's nobody in the background going to change that and move it. So don't believe everything you see on the TV. If your accountant prepares your return, it's not likely, they will pick up these little errors. And depending on the amount of errors, it could end up that your accountant would end up charging you more to correct your errors than they would have done for doing it in the first place. So that's something to bear in mind as well. So I have got a few more points. Sorry, I know this is quite a long video. Mixing business with personal. So we quite often see personal expenses are put through the business where they shouldn't be. And we know this happens. Realistically, yes, you are meant to keep it separate, but we've all done it. I've done it. We've all done it. So it happens. You just need to make sure it's accounted correctly. So you don't just delete it from the bank statement line. You have to put it to the director's loan account. And at some point a dividend will need to be voted to cover it. So it could be things like we see things like car payments go through on a personally registered contract for your car. Family meals we see go through, and yes, the taxman will see exactly what we see when it says children's meal. You can't get away with that, I'm afraid. Excessive subsistence. Now obviously you can put some subsistence through the business for meals when you're travelling and things, but literally putting your lunch every day or your dinner every day is just too much, and it will come back to bite you. personal tax payments. Caroline's recently done a blog on the implications of that. People will pay it through the business, we know they do, but it's accounting for it correctly. That doesn't go down as a tax expense, it goes down as a personal expense. And I can go on and on and on about all the different things with their actual personal costs, and they need to go down to director's loan account, and then we can either, as I said before, vote dividends to cover it if you've got the profits, or you at some point will need to repay that to the business. So I've gone through a lot there and I hope I haven't scared you too much, but bookkeeping, as I said right at the start, is so important to make sure it's getting it right. And it's not just a case of the better the records, the better information you have. It's the better your records, the cheaper your year end will be. We base our VAT fees and our accounting fees, in part obviously, on the quality of your records using our Zero Health Check report. So we know you're not a trained bookkeeper. You're in business to do whatever you want. You haven't spent years like us, not stereotypical accountants, training to do this sort of thing. So we know there's going to be some degree of corrections and tidying up in the records, so we take that into account. However, if the errors are a lot, and there's a lot of errors, or they're big errors, we need to spend more time to fix those. So therefore, we're going to have to charge more for your VAT returns, for your year-end fees, so that we can fix it. And trust me, we don't like coming back to you and saying there's a problem, we need to charge you more. We hate that. That's not what we want to be doing at all. So we can provide training, and we do work with clients to improve your bookkeeping skills. But sometimes it just boils down to the fact that you're probably better off, and it'd be cheaper, just letting us do it in the first place. It gives you less stress, and probably means you can earn more money doing your thing elsewhere. After all, you didn't set up your business to spend hours doing bookkeeping. We did. So there you go. Just mentioned a Zero Health Check there. So what is a Zero Health Check? Now this is a report we run, and there is another video on this. Or if you're watching, or if you're not watching as part of the blog, if you hop over to the blog, there's the video you can see there, and you can download a sample report as well. And it just checks out the quality of your records, and it helps us build a picture of, as I said, the quality of your records and how useful it will be to you, for us to be able to prepare all these stuff that we need to do for you. So go and have a look at that video and download that report, and you can see exactly what it means. We can do this. We kind of run this for every new client that we look to potentially bring on, as part of our onboarding, or like sales. I don't like calling it sales, but as part of the process of exploring working together, we would do that anyway. But if you're just interested to see, we can also produce that for you. So please do get in contact with us and we can do that. So yeah, that's kind of everything you need to know about bookkeeping. As I said before, we can help you. We've got training. We can help you improve everything. But if you've read all this and I've scared the hell out of you, and I apologise, and you think actually it's just less stressful for somebody else to do it, then you can read more about our bookkeeping service, or you can get in contact with us to talk more about our bookkeeping service. Or if you're ready, you've heard enough, and you want to get want to look at explore working with us, we can take it over. Then towards the bottom of this blog, or if you're watching this on YouTube or somewhere else, there'll be a link to it. You can go to our Work With Us page and complete our quick questionnaire, and then at the end of that there'll be a link to book a discovery call. So I look forward to hopefully speaking to you soon.